Let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications.
The U.S. stock market is facing challenges in early September after futures contracts dropped amidst uncertainty over interest rates and tax policies. While several analysts are warning that September may be a highly volatile period for investors, along with concerns about an economic slowdown that could lead to a recession. At the same time, the tech sector still has significant movement, including the expansion of Amazon AWS and the downgrade of some semiconductor stocks. What will today's story be? Let's go watch and listen.
JOYUP Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours.
Let's start with big news. Futures contracts, or what we call futures, are contracts used to predict whether the index will go up or down on the next day. They are slightly declining. The main reason is the uncertainty about President Trump's policies, both on trade taxes and interest rates. Right now, the market is confused with the PCE inflation data. PCE stands for Personal Consumption Expenditures, and it is like a thermometer for inflation that the Fed uses to see how fast prices are rising. The latest data shows that inflation is still quite stubborn and not coming down as expected. This makes the Fed, or the U.S. Central Bank, have to reconsider cutting interest rates, even though the market predicts an 86.6% chance of a 0.25% rate cut in September. As for the main indices last Friday, the S&P 500 decreased by 0.6% to close at 6,460 points. The Nasdaq decreased by 1.2% to 21,455 points, and the Dow Jones had a slight decrease of 0.2% to 45,544 points. But don't be sad just yet. Even though the appeals court ruled that Trump's taxes are illegal, this could be good news for the market in the long term because it reduces trade uncertainty, even though Trump said he would appeal to the Supreme Court. This week, we also have interesting earning reports from Zscaler, Salesforce, Broadcom, and Dollar Tree waiting for us. For individual investors, it is recommended to follow the Fed's information closely this week. And don't forget that September is often a volatile month for the market anyway. Let's move on to a warning from Lam Research. This is a famous analysis company known for its stock market analysis. They came out to warn that this September may be a risky period for investors because September has a long history of being a month where the stock market is often in a volatile mood. What's interesting is that the S&P 500 may have already peaked at 6,501 points in August. Even though NVIDIA reported fantastic performance, it couldn't lift AI stocks or the overall market on the next day. This shows that even good news doesn't guarantee the market will always go up. The main risk factors to watch this month are three big ones. The first is the Fed meeting on September 17th. The market expects a high chance of a rate cut, but Yardeni thinks it may not be necessary because the U.S. economy is still strong. Consumer spending is still good, wages are still increasing, and GDP, or gross domestic product, is still growing strongly. The second is domestic politics. President Trump is clashing with the Fed over its independence, which causes uncertainty in future monetary policy decisions. The third is trade taxes. The appeals court ruled that most of the taxes are illegal, but they can still be used until mid-October, pending the appeal to the Supreme Court. As for foreign countries, there's no less drama. France has political problems, Germany is at risk of a manufacturing recession, and Japan has rising bond yields. But the good news is, if September is weak, as it has historically been, it might become a great opportunity to shop for quality stocks at better prices to prepare for a recovery in the late part of the year.
Here's another warning. Recently, Barclays Bank came out to warn that the U.S. economy is slowing down at a worrying level. By using a model called the turning point model for analysis, the result is quite harsh. There is a nearly 50% chance that the economy will enter a recession within the next 8 quarters. What does a recession mean? Simply put, it is a period where the economy shrinks for at least 2 consecutive quarters, causing negative economic growth, job loss, and companies reducing investment. This is the situation. Now, Barclays says the U.S. economy is in a state of stagnation. Think of it simply like a car that is running and starting to slow down. It might have to stop the engine now, or it might be able to continue a little bit longer, but it's definitely not as fast as before. And how does this affect investing? Due to this situation, the Fed or the U.S. Central Bank may have to cut interest rates. Interest rates are the rental fee for money that banks charge. When interest rates are reduced, more money circulates in the system, making people dare to invest more. What's interesting is that in the past August, hedge funds and systematic investors increased their stock purchases because volatility decreased. Hedge funds are funds that use complex investment strategies, while systematic investors are those who use computer programs to help with investment decisions. But on the other side, long-only fund managers, which means funds that only buy stocks and do not play with selling, chose bonds more because they think it is safer.
Let's go look at some individual stocks. Today, Joy brings 3 for you. The first is good news for Amazon stock. First, for anyone who doesn't know what AWS is, AWS stands for Amazon Web Services. It is Amazon's cloud service that allows companies to rent storage space and use computers through the internet instead of having to buy expensive computer machines for their company. Amazon just announced the launch of a new AWS region in New Zealand with an investment of NZ 7.5 billion or about US 4.5 billion. Why is this important for investors? The first reason is that before this, companies in New Zealand that wanted to use AWS had to store data on servers in other countries, which made the internet slow. Plus, some government companies have rules prohibiting data storage in foreign countries. Now, Amazon has solved this problem. The second reason is that Amazon estimates this investment will add NZ $10.8 billion to New Zealand's GDP and create 1,000 full-time jobs per year. This is a very good return on investment. From an investor's point of view, AWS now has a total of 120 service zones in 38 countries worldwide. This expansion shows that AWS is still a strong leader in the cloud market and has a clear long-term plan. But wait, anyone who thinks they are going to buy sheep in New Zealand with this investment is wrong. They are going to build a data center.
Let's continue with the second stock, Lam Research or LRCX. This is a company that produces tools for making computer chips, and this time it was downgraded to underweight by Morgan Stanley, which means the analyst thinks this stock will perform worse than the overall market. With a new price target of $92, which is about 10% lower than the current price. Hearing this, it's not really good news. The main reason comes from Morgan Stanley's view that the 2026 outlook will be weaker, even though Lam has been doing very well during this time. It has benefited from the demand for NAND memory chips used in mobile phones, orders from TSMC, a giant chip factory, and strong sales in China. But these good things are expected to slow down in 2026, with growth decreasing to only 5%, because NAND and China combined account for more than half of Lam sales. What's interesting is that even though Lam reported better than expected results, the stock price decreased on the next day. This shows that the market has already priced in or calculated very high expectations. It's like a good student everyone knows will get an A. When they see the actual exam results, they aren't surprised anymore. For investors who are interested, you should follow how Lam will handle its reliance on the Chinese market and NAND.
And don't forget that analysis can also be wrong.
And to end with a good article on Rocket Lab stock, or RKLB. They officially launched Launch Complex 3, or LC3, in Virginia recently. This will be the home of the new Neutron rocket, which is 43 times bigger than the old Electron rocket. This Neutron is 141 feet tall, uses methane gas mixed with liquid oxygen as fuel, and can transport heavy cargo of up to 13 metric tons to low Earth orbit. And what's exciting is that Rocket Lab hinted that in the future, they might send humans into space, as if they want to compete with SpaceX and Boeing. What's interesting is that Rocket Lab already has 2 satellites ready to go to Mars, which are part of the Escapade mission with NASA. But the problem is there is no rocket big enough to send them, and they have to wait to book a queue for other companies' rockets, such as SpaceX's Falcon Heavy or Blue Origin's New Glenn, which has caused delays. But now, with Neutron, they can send it themselves without relying on anyone. In addition, Neutron also plans to compete in the cargo resupply market for the International Space Station, which is currently dominated by SpaceX and Northrop Grumman. It looks like Rocket Lab is coming to shake up the space market. The fact that the stock bounced this much shows that investors see the potential for business expansion and competition with giant space companies. But don't forget that the space business also has high risk, because just one rocket explosion and the stock may plummet like a rocket falling to Earth.
Well, I must say, today's content was very full, as it should be after the market closed, for us to rest for a full day. And for all of today's content, Joy would like to thank investing.com and the good articles from the Motley Fool for the good information. Now, let's look at the live, daily updated prices for the individual stocks related to today's news with the JOYUP Forecast segment. Let's look at RKLB, Rocket Lab Corporation. Now, the price is at about $48.60, and it is about to hit a major resistance level that we drew. It's a point that needs to be watched closely. If it breaks through $50, there is a chance for it to surge long to the $55 to $60 zone for sure. But if it can't go through and is rejected, it might fall back to find support at $42 to $45 instead. The RSI is at 53.58, not yet overbought, so there is still momentum to go further.
Next is LRCX, Lam Research Corporation. This stock's graph has been in a clear uptrend for a long time. The current price is at $100.15, and it is about to hit a major resistance at the $100 to $105 zone. If it passes this zone, there is a chance to surge to test $115 to $120. But if it doesn't pass, there is also a chance for it to adjust down to the $90 to $95 support level. And the current RSI at 56.04 is still in the middle zone, not overbought, so it still supports it to go further easily. Finally, AMZN, Amazon.com Inc. This one is just as strong. The graph has been running in an uptrend channel since 2022. Now the price is at $229, which is still in the middle of the channel and is slowly moving up to find the upper resistance at $240 to $250. If it breaks, there is a chance to surge long to $280 to $300. The major support is at $200 to $210. The RSI at 54.59 is at a good level, not too high, so it still has a lot of momentum to go further.
All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.